we'll do the wrap up real quick. You know what? I'll just use TradingView. It looks better over there. So big slide in the SPX today. We'll use the SPY. Down about 330 basis points, all the way back down to that 405 resistance, which is, you know, kind of the, well, actually a little bit below the neckline here for that last tail part of the rally. The ascending wedge that we were in has definitely broken down. Obviously, if this continues into Monday, the next downside price targets would be 395 and 387.40, both of which are pretty important. I don't know if it will. I think after this hard of a fall, we may see some recovery. Either that, or we're going to see some really, really serious downside, like down into the 60s. If this keeps dropping through the weekend and we see, you know, futures falling off into Monday morning, it's going to get pretty wild. Thanks, LSD. And most of this just really not on any actual news. And I think with the jobs reports coming in next week and, you know, minimal big macroeconomic data, that we will likely see some stabilization, probably between 400 and 413 to the high end. But we'll see how it looks by this Monday. Revlon being a little weird today. Had some very strange like liquidity lockups around the midday, where it just right here where it just got kind of stuck at 628. They tried to stop the breakout. They were unsuccessful. It broke out above and then kind of just relaxed into the end of the day. This is starting, I think, to get more illiquid, and they're trying to possibly control gamma expansion on it, because obviously that would present a great deal of risk if you're unable to hedge it. Fubo dropping down to its lower support in my buy-in range. As far as I'm concerned, any buy-ins below this point, like opportunity to buy the stock between 260 and here, are a great opportunity to DCA. If Fubo is something you're interested in, I like it quite a bit, so I will be buying the dip, so to speak. BBBY actually did pretty well today, maintaining its upper trend on this channel and actually pulling up a little bit. The biggest problem here is that there's almost a constant sell-off of the $10 strike and a lot of put gamma between 11 and 13. And this means that every time it tests 11, the market maker starts selling shares. And then when the market maker starts selling shares, people start selling $10 calls. Because obviously the $10 call they bought at 950 is now dropping in price. And so this kind of makes it very, very hard for BBBY to move up into this higher channel. I'm not saying it can't, but right now it's not looking so good. We'll see how the OI looks for next week, and I'll update this going into Monday. But yeah, right now, I mean, very much locked into this lower wedge. And then GME kind of trading flat most of today, right at like gamma neutral, just below gamma neutral maybe. And on this $30.70 resistance. If this continues to break down through this trend over the next week, we may see lows as low as like 28 or 26.50. So that's what I'll be watching out for. Great time to reposition. Good opportunities to sell cash secure puts. And maybe really good opportunities to buy calls for September OPEX. And then if you guys are already in covered calls, obviously not in a lot of danger for moves to the upside right now. Anyway, thank you all so much for tuning in. I appreciate it. And I will see you, well, member stream Sunday at 12:30 p.m. Eastern time. And then the rest of you, I'll see you bright and early Monday morning. Have a good weekend, guys.